What's up, everyone? All right, so I'm going to go over my trades for today. I'm finishing the morning at $8,470.17. A green day, which is great, and we had some real action today. So Momentum Mondays are back, at least for now. This is a good start to the week for me, and I had a nice finish to the week on Friday. So, right now, feeling good with two nice back-to-back green days that are over the daily goal. And we definitely had some stocks that made big moves today that I didn't trade. And for the most part, I really don't have much FOMO. Despite seeing some traders posting some really big P&Ls, I feel really pretty good about where I sit today. So I'm going to kind of walk you through how I got to that place. Part of it is because I haven't gotten up from my chair. It's 2:30 and I've watched the market all day. So I don't feel like I've missed opportunities. I've chosen not to trade some. But I am sure that if I had left for 2 or 3 hours and then came back, I'd probably sit down and look at some of the moves and think, oh my goodness, I can't believe it. I shoulda, coulda, woulda. But having actually sat here through it and chosen not to trade it, I don't feel that way at all. So let's start at the beginning of the day. All right, so I sat down this morning at around 7:30, quarter of 8. And initially our gap scan, which, I could show you the gap scan right now, but it's going to be the gap scanner as of 9:30, which was different than 7:30. But one of the leading gappers at the time was CFRX. So CFRX was gapping up, and, I looked at that and I was like, oh man, I don't know if I like CFRX. The thing with CFRX pre-market, and that was sort of right in this area, around 7 to 8 a.m., it was below VWAP. It had pulled back. It hit a nice high of $2.97, but below $2, this is the type of stock where my metrics tell me I don't trade them really well. It's a combination of lower priced, very thickly traded. It can be really hard to get quick breakout trades. Doing a high-a-day breakout for a quick scalp through the highs, you don't usually get very many cents per share. It's hard to scale up. The dips, you can get some bounces, but when you're dealing with a cheap stock, you don't get a big bounce. So just the whole range is a bit compressed. And while some traders can do really well on this, accumulating a big position and holding through the move of a grind up, which I saw some traders do very well on the break at 250 up to 350, that's just not typically the way I trade momentum. And I could talk about this for a long time, and maybe I'll set aside some time to get into more detail on it. But my approach has really always been about quick in, out, quick trades. And that for me has been a strategy that I've used to mitigate risk. I'm such a nervous Nelly. I'm such a risk averse trader, which you wouldn't expect because, I obviously am a day trader. I'm taking risk, but I don't feel comfortable when I'm holding a big position and I just am looking for the exit. And it's not hard for me to see something and think, oh, I better get out. Because if I'm just sitting and holding 25, 35, 50,000 shares of a stock, I feel uncomfortable. I'm thinking about the potential of a big flush, bad news coming out and losing 50 grand. And so the discomfort leads me to resolve that discomfort by selling the position. And the result is that I've become a trader that jumps in and jumps out and jumps in and jumps out. And so as the stock is moving up, I'll get in it, take profit, get out, get back in, get back out, get back in, get back out. I've never been the type of trader that gets in, sits back, sets my stop, and then, just lets the whole thing go. And while there are certainly times where I could have made more money like that, there have no doubt been probably more times where I've been up on a stock, and if I didn't take that profit, it would have gone red. It would have gone against me because it went up for a little bit and then it rolled over, came back down. Or you had a nice breakout and then a rejection. And if you're a fast trader, you can be profitable even during a rejection because you take your profit when you have it. So that's my kind of philosophy of trading. It's probably capped my upside profit potential quite a bit, but I really shouldn't complain too much. I'm green on the day. And one thing I'll say is that if you saw someone today who made, maybe this is 10 times what you made today. Well, I saw someone that made more than 10 times what I made. I saw someone who's up over 100,000 today in our community. He's got his $1 million badge. I'm super proud of him, but you could always compare yourself to someone who's made more than you. And the second you do that, and the second you're no longer grateful for the money that you've made, that's a quick path towards giving back what you made on the day. Now you start chasing someone else's P&L. I'm thinking 8,000 is not enough. I'm not satisfied with that. So then I risk it, and next thing you know, I'm in a 30,000 share position looking for a quick squeeze, and it flushes 40 cents. I'm down 12 grand. And I go from up 8,000 on the day to down 4,000 on the day. And then you feel really bad. Because of course, in hindsight, you think, why wasn't I able to be grateful for being up 4,000 or 5,000 or 8,000 or whatever it is? So try to keep your head down. Don't compare yourself too much to other people. And, I say that while I know you're watching a recap where I'm talking about my trades. And so I hope that you look at this just as, okay, this is the P&L Ross did. Good for him. He's been doing this for more than 10 years. So he's earned the right to trade with a share size that can produce that type of profit. Let me look more at the stocks he traded and what he was looking at than the total gain. So let's do that. All right, so I started the day seeing CFRX, but not being very interested in it. And then BLBX all of a sudden starts squeezing up on merger news. Now, typically mergers are not great catalysts. So I didn't think much of it. I thought almost nothing of it. I was like, I don't know, merger news. I don't know. So I kind of looked away, didn't think much of it. And I look back and the stock is at, it went from $2.90 to $3 to $4 to $5 to $6 to $7, right up here to $6.99. And I saw that and I just thought, you know what? You may recall I had a trade last week where I jumped into something that had made a pretty big move, kind of like this on relatively light volume, and I got smoked on it. I mean, wasn't that bad, I guess, but I lost 3,500 on it. I was pretty annoyed at the time. So through this area, I was like, I don't know why merger news. I got a bias. The bias was merger news is not a strong catalyst. So I didn't take this break here of 7, and it goes up to 881. It then pulls back and it rips here up to 10. So now I'm like, okay, put your bias aside. This thing is moving. It drops down right here. And my first trade was a dip trade. And I bought 2,000 shares at $8.94. I added another 3,000 shares as it came back up here. And in this first trade, I made about $4 grand. Not bad, right? Added it 894. Stop was the low of this candle, which was 859. 2,000 shares, so about a 40 cent stop. So risking about 1,000, and then added another 2,000 right here. It popped up to 929. Micro pullback. I added right here, and then my final add was at 981 for the breakthrough highs, and it rips right up to 1087, and then up to a high of 12. That was awesome. I mean, that was really solid. Nothing I can complain about with that trade. Well, I could say I wish I'd started with 20,000 shares, but to be honest, I don't think that I would have been able to buy 20,000 shares without a lot of slippage. The volume was still pretty light. I could have traded a little bigger, but not a whole lot bigger. So anyways, it pulls back here, it sells off, and then we got another really nice move right here. I did focus on dips, and not all of them worked. I did a dip off of VWAP right here. Kind of just went sideways. Didn't really work. It double bottomed right here. And again, I kept trying to buy these dips at VWAP. This one finally worked. It popped up, but notice how that's a topping tail. Hit 969 and then dropped back down. Then right here, it starts to pull away at about 950. And I got back in on this trade here. And let's see. So the time on this was about 8:23 a.m. So I got back in on this candle and I added as it squeezed through 1050, and we got this move up to about 1150. And that was another like $3,000. Put me up, maybe $4,000, put me up about 9,500 on the day. I then gave back 1,000 on that false breakout right there. So, I did give back a little bit off the top. I traded it. My last trade on it was at 9 a.m. And that was, let me look at my trade at 9 a.m. It was a loser. I had added at 10:21. and stopped out at, sold half at 10.29 and sold the rest at 10.02. I was trying to, I guess, do a bounce here, but it wasn't really bouncing. It was back below VWAP. So, you know, I gave back 1,000 off the top, but life is good. This is a nice green day, and at the open, it just sold off more. I was tempted to do a long right at the open with a stop at the low right here, but I thought, you know, it's below VWAP. I'm just going to leave it alone. I think I've already given back a little on it. Let's just wait to see if it can prove itself. And it didn't. It sold off. So now I was left with leading gapper rolling over at the open. So what else did we have? Well, we had CFRX, but I already didn't really like it because the price action, you know, this is what happens with these stocks. It's got 106 million shares of volume. It's very thickly traded. It's trading in a relatively small range. It's a battle. If you're trying to do quick breakout trades, if you're trying to be a scalp trader and jump in, jump out, it's going to be tricky. You've had a couple nice little pushes, but I didn't see this one coming really, because the thing is, it broke 250 right here pre-market, went to 260, and then it dropped back down. So I didn't feel comfortable on that. So I don't have any FOMO over it. I don't care. It went up, but I didn't like it. I saw it, and I didn't see an entry that I liked. So there's no FOMO. There's no reason to have FOMO. Then we had WINT. I watched the whole move, and I didn't take one trade on it. So WINT, here's the problem. This is the reason I didn't trade it. Great move. I mean, for sure. It went from $4, $5 up to 18. That's awesome. And I'm sure that there's some people that traded it and did well. And I could have broken the ice on it, but here was the problem for me. I watched it get halted right here at 560, whatever it was, 540. But it was on very light volume. And, you know, I hadn't taken a trade since 9 a.m. So it'd been about an hour since my last trade. And I was noticing people were trading like 10 different stocks. You know, some people were like, oh, PRST, trading PRST. Other people were still focusing on BLBX. Some were focusing on CFRX. Some were focusing on BLCM. I mean, we had like just so many different stocks that people were trading. I kept thinking to myself, I can't tell what's obvious. So when WINT was halted up, but on like no volume, I thought, no, this isn't going to be obvious. The traders are focused on other things. So it resumes, and that was at 650. It dips down here to 580, and then it curls here up to a high of 669, drops down, pops back up to almost a halt level. It drops back down, and then it was able to halt up, but just barely. It almost didn't. It did false halt a couple times, and then it did halt up, but it was on light volume. It opened lower. It dipped down to 675, and then it squeezes up, and it halts at 853. And I was like, well, I don't know. It's all right. Well, now now we're on the third halt up. I can't really trade it up here. It's too extended. So I was like, well, but maybe I could get a dip trade. It opens, goes straight into another halt. There's no dip. So there's no trade. The only trade that I feel like I could have taken that I missed might have been this dip right here, or maybe this one, right in here. Those were proper pullbacks, but they were very quick and then into a halt, and I just wasn't totally sure. So I missed this whole move up, which is fine because buying it right here would have just been chasing. And you know what? In a hot market, you can get paid chasing, and it was hot today, so you could have gotten paid on that pretty nicely. It went from 10 all the way up to 14, but it halts down, it drops down, and then right in here we had a big candle, right? Big high low, sort of choppy, upper candle wick, lower candle wick, upper candle wick, and then it kind of grinds. But see all these upper candle wicks? So what that shows us is that it would pop up and then sort of pull back, pop up and pull back. It was grinding higher, but it was a little choppy, and the spreads were bigger. The volume was still light. It halts up a second time, another topping tail, and I just couldn't get comfortable on it. So, it just is what it is. So I just don't really feel bad because I watched it and I couldn't get a good entry that I felt good about. So no trades on it. KRBP, this one also went up. Some traders were talking about this one. Watched it as well. Sort of somewhat similar daily chart, reverse split, lots of room to the 200. By the way, WINT, the 200 was sort of, I was surprised it broke it, but that was the 200 right there. Recent reverse split, nearby 200 moving average. Well, a good amount of room though. So yeah, that one, and then you had IONM. I saw some traders were looking at that. Also recent reverse split. But look at this one. Round trip, right? Goes from 3 to 6, 7, back to 3, 60. So they didn't all hold up. And I could see very easily how a trader could have gotten themselves, in fact, in the red today by being maybe too aggressive on the wrong one. There was a lot of momentum. We have a stock up 200% right now, PRST, another one up 270%. We have multiple 100% moves. I mean, we had a big day today. I feel like I could have maybe done, a little bit better, but I'm in this place right now where I'm just trying not to compare myself to other people, but just to keep my head down and chip away at green day, and be grateful for that. And those green days add up. One of the problems I talked about, I didn't have a very good Q1. I was behind on my Q1 goals that I set for myself. Now, that's life, that happens, but it's very different when you feel like you have a cushion and the wind's at your back and you can afford to take a little risk versus when you feel like you're a little bit behind the ball and could you throw a Hail Mary pass? You could, but 90% of the time, maybe more, those don't work. And this isn't a game that's just going to end and I get to start over, with a fresh start tomorrow. This is a marathon. So if I lose today because I'm too aggressive, I'm going to have to make up that ground tomorrow. So it's better for me just to pace myself, be consistent, hit good base hits, and let the profits add up. Now, if I can have a month of consistent base hits and I can, get ahead of my goal, then all of a sudden I've got the wind at my back and I'm in the driver's seat. And then that psychology changes where I can start to take a little bit more risk. Then different people look at this differently. Some would say, look, Ross, you've already made, $10 million trading. You could take a ton of risk. And while that is one way to look at it, I also look very closely at how well I'm doing each week, each month, and each year. So just because I had a really good year last year, the year before, whatever, this year has to stand on its own. If this is a year where I step up and I take a lot of risk, but then I end up being red because I overtrade and the risk doesn't pay off, I don't end up getting any home runs, we're in a persistent bear market, then I'm probably going to wish that I had just focused on base hits and paced myself. So that's just different approaches. It's strategy ultimately, and for me, I come to the table with the mentality of trying to trade to produce relatively consistent income. Now, of course, my results aren't typical and there's no guarantee that you'll find success as a trader, but just to help you better understand the way I'm looking at it. So in order to produce relatively consistent income, I can't take $50,000 of risk today. Even if it could produce $150,000 of profit, mentally, I can't stomach that kind of loss. Even if financially I can, easily recover that or easily handle that or stomach that loss, emotionally, I can't. So, a goldfish is going to grow to the size of the pond that it's in. And as a trader, you're going to grow kind of to the limits of your emotional comfort. And I think it's good to push the edges of your comfort. And if you're not pushing the edges of your comfort, you're not going to be growing. But I have also found that there are certain markets that are going to give you more reward for pushing your own comfort zone, and there's other markets where you're going to push your comfort zone, you're going to repeatedly get knocked back down, and that's going to make your comfort zone a little smaller. And I'm in a period right now where I'm coming off a bit of a choppy Q4 and Q1, and so my comfort zone is a little bit smaller. I'm being a little more conservative, and I'm trying to rebuild a little bit of momentum and get to a place where I could start to feel comfortable sizing up a little bit more, but I'm not there just yet. So what I'm doing right now is just keeping my head down, focusing on base hits. I would have been happy to trade longer today, but I just didn't feel super comfortable on the couple of stocks that ended up going higher without me. So that's that. I'll be back at it tomorrow. I hope you find this helpful. If you do, I hope you hit the thumbs up. I hope you're subscribed to the channel. feel free to leave comments down below, and I'll see you back at it first thing tomorrow morning. If you want to check out Warrior Trading, you can come over to warriortrading.com, check out the Warrior Starter and the Warrior Pro classes. All right, I'll see you guys soon.